Yeah, I'm good to go.
All right. So here we are. Thank you so much, Vishal, for joining. Friends, may I request you to please welcome Vishal Biraya from Bandhan Mutual Fund, and we'll talk about Bandhan Business Cycle Fund. Welcome, Vishal.
Hi, thank you very much.
All right. So, Vishal, first of all, congratulations to Bandhan Mutual Fund and all of you for fantastic performance. You are topping the charts in so many funds. And my first question is this: that equity markets are on a roll. And I clearly remember that many mutual fund houses came out with a view early in the year that this year the returns will be muted. What's your take now?
Thankfully, we were not part of the gang. We were
Okay.
of the opinion that we were seeing earnings to be very resilient. And because of that resilience in earnings, we were of the opinion that there will be pockets of overvaluation, yes, which will impact returns generation for the year, yes, but there would still be pockets of undervaluation and pockets and ideas where we would be able to make enough alpha, and that is what we have been able to. So were we cautious? Yes, but were we negative or overly cautious? No.
So as a follow-up, let me ask you this. Of course, nobody knows this, and
Yeah,
markets have run up like never before.
yeah.
Do you foresee a major correction?
See, there will be negative surprises that we will see, right? These negative surprises will time and again come up, and we will have to manage those. Based on the available information that we have today, we don't see a very sharp correction. But tomorrow, if a negative surprise is such that which can impact earnings in a meaningful way, then yes, we will have to evaluate that risk at that point in time. But from the available information that we currently have, we don't foresee a very sharp correction. Can a 5-8% move here and there can come about? That can come about very easily at some point in time, and we will have to be ready for that. And as fund managers, we are, uh, I think, trained, equipped, and geared up to handle such situations.
Very well said. Vishal, I must I must appreciate that Bandhan Mutual Fund was one of the few AMCs that gave a call on small cap. While
Yeah,
other mutual fund companies were stopping in inflows, SIP and lump sum,
yeah.
Bandhan came out openly and said that we are bullish on small cap, and your call went right. What made you
Thank
say
you.
that? And is this call currently on? Do you still believe that small cap has the potential to beat the large cap and mid caps in the future?
Yeah. So first of all, thank you for acknowledging this. We are grateful.
Yeah.
Uh, See, we like to think in terms of earnings, right? And if you look at the last quarter earnings and the quarter before this as well, right? The earnings have been fairly good. We have not seen as many downward revisions in earnings as we normally see. So one is that. The other is the basket of small cap has also expanded, right? The thousandth company on NSE has a market cap of 2,200 crores approximately, right? So there, the depth of the market has also improved. The breadth has also improved. Not to say that it's become very liquid and tomorrow you can go out and buy as much as you want or sell as much as you want. There will be challenges. But from where we were to where we are today, there is a meaningful expansion of the small cap basket, especially. So anything below 250, right, is a potential candidate for inclusion, subject to all criteria of selecting a stock. So I'll be of the opinion that today will we be able to select enough stocks for a small cap fund that have a return potential that beats the market. I think we are able to do that as of now. So we continue to maintain a bullish stance on the small cap universe as a whole.
All right, moving to the interest rate cycle. Last 18 months, correct me if I'm wrong, last 12 to 18 months,
Yeah.
fund houses, I'm not specific to Bandhan because I'm not very sure about Bandhan's call on interest rates. But I believe even Bandhan, last 12 to 18 months,
Yeah.
almost all fund houses have been talking about reduction in interest rates. Didn't
Yeah.
happen. And
Yeah.
people take a big bets on gilt and other products, and sometimes it comes as a negative surprise. What's your call for the next 6 months, 1 year in terms of the interest rate, and should people go for long dated securities now?
Sure. So if you see, it's interest rate cuts have been postponed, right? We are just waiting for the interest rate cuts to happen. Uh, it is Will it happen? Yes. Is it just a matter of time now? Yes. So I think instead of thinking as to if, now the question has become when. So if US is able to cut in September, and that is the popular expectation, if you look at Bloomberg consensus also, I think 25 this is a given. And if that is a scenario, then we should see cuts in October, November in India as well. And it should just be a matter of time rather than thinking that whether it will actually happen or not.
So do you think if that happens, that will another be a kicker for Indian equity markets?
Not very significant, but for specific sectors, yes. We think will that be a kicker? Will that be a kicker for non-banking finance companies, real estate? Yes, it will be. So we will be pretty positive in terms of the I mean for these particular sectors at least, and for the economy as a whole, because uh, our neighbor China has been able to meaningfully reduce rates, right? If you see the 10-year GSEC is sub 3%. So there is a case for us also to have to see a meaningful reduction, and I think we should be able we should get there somewhere soon.
Great. Let's come to the business cycle fund. And let me ask you some specific question because there's so many mutual fund distributor and we'll also pass on these videos to many more. Why business cycle and why at this point of time at the highest index?
Right, right. So actually, business cycle is as a fund is more suitable at this point in time in the market. The reason is there's several sectors, right, have moved up, and is there a case for rotations at some point in time? Yes. Now, if you rotate from one sector to the other, as from one sector fund to the other sector fund, the investor will have to take some hit on the tax front, with be it 12.5% or 20%, depending on the time frame. But if I do that in the sun, in the same fund without actually moving out of that gambit, then I don't have any tax implication. Number one, the risk of moving out from one sector to the other, whether that is the right call or the wrong call, right? That risk also is being taken by me rather than the investor himself or the MFD, right? So this is a space where now the other big aspect, right? Uh, is sector rotation actually needed? If you take rolling returns or returns at any point in time in the last 15, 20 years, whatever period that you take, there is a significant deviation in returns across the sectors. We generally have a perspective that perception that if markets are going up, everything is going up, or if markets are coming down, everything is coming down. So how does it matter? It makes a lot of difference. Today, if you see the last 12-month returns of infra and power are way higher than the returns of last 12 months
Sure.
of say FMCG or banks, right? So it pays to rotate out of sectors. We think we will be able to do that. Will we pick all the right sectors and correctly, and will we avoid all the right sectors absolutely completely? No. Will we be right, say, 2/3 of the time? Yes. So even if we are able to say pick two of the top three sectors that perform the year, and if we are able to avoid at least two of the bottom three sectors for that particular year, we should be able to meaningfully outperform the returns of the market.
So if I were to extend this,
Yeah.
you're coming out with an NFO. So whatever money you get in the NFO, have
Yeah.
you already selected or in terms of what are the sectors currently not doing very well, which are expected to do well, where you will put your money?
See, there is, if I am to deploy today, yeah, then I do see a meaningful deployment even in industrials. Now, industrials is a sector which has done well. So when I say industrials, it includes infra also. So it includes road, rail, uh, ports, airports, manufacturing, defense, right? So all of these sectors would form a part of industrials. Now we still see enough value in industrials as a space, even though some of the stocks have run up a lot, and as a sector also it has run up. But what people don't see is order books have kept pace, earnings have kept pace, right? So unlike the last cycle, where it was just a hope that these orders will someday come, and these companies will someday make enough money of these orders. Today, those orders are actually coming in. Today, these orders are actually being converted to free cash flows, implying enough EBITDA being made, enough net profit being made, net leverage is significantly lower. So we think this cycle is more sustainable. So there be some consolidation possibility? Yes. Will there be a scenario where some of these stocks are very have run up a lot and may get tired? Yes. But will there be another set of companies which will do very well within the industrial category? We still think so. Yes.
So one question that comes to my mind, Vishal, is that, when we talk about thematic funds or sector funds, there's a very clear message from MFDs as well as the fund houses that you should not put a lot of money into these sectors. Maybe 5%, 10%, 15% of the client's money can go into a sector. Do you consider business cycle into that category, or business cycle can be treated as a flexi cap or a large cap category as a diversified equity fund? Can there be this rationale? Because why I'm asking this question is that MFDs or investors still believe that a major core portfolio should be into large cap, flexi cap, or diversified portfolio. Do you think business cycle can get into that space, or it should be treated as a part of the portfolio only?
A business cycle fund essentially is a diversified fund and should be treated as a diversified fund, because here what you will be doing is, what I'll be doing as a fund manager is, I will be significantly overweight certain sectors that I like and significantly underweight certain sectors. But right, will that large sector be almost zero? I actually don't think so. Maybe in rare circumstances, yes. Because, for an example, I might still like an idea or two, right, which are bottom-up ideas in that sector, which might do well on absolute basis, irrespective of what happens to the key sector trends. So why should I rob the investor of that opportunity just because I want to market it in a different way? So I'm saying that look at it as a diversified fund with significant overweight and underweights. Some of the diversified funds that are there in the market are not deviating much in terms of the sector weights. And that is where we are committing to. We are saying that we will deviate significantly when it comes to a business cycle fund and when it comes to these sectors, at least the large sectors. I think, and if you look at the ones that are listed in the markets, the business cycle funds, they have been able to beat the returns of the diversified funds on absolute basis and even on Sharpe ratio basis, which is the risk-adjusted return.
So, Vishal, if I were to consider business cycle fund for the client, where should I place the risk? I should place a higher risk or a lower risk as compared to a large cap, flexi cap kind of a portfolio? Because you said it is also a diversified, but on the risk parameter, where does it score? You said the returns are better. Returns can be better. What is the risk score considering the
risk? Sure. So a very valid question at that, and a very important one at that. So yes, the risk will be slightly higher than a typical diversified fund. See, for a fund that is not deviating too much from the benchmark sectors, right? Whereas I am. So yes, the risk will be slightly more. But if I look at the way I have managed my infra fund, or the way we've managed Bandhan's funds, and the business cycle funds that are there in the market today, I think if you manage it correctly with proper diligence, then there is a case for business cycle funds with sector deviation to actually outperform the returns of diversified funds, even on risk-adjusted basis, on Sharpe ratio basis.
And what do you expect to be the large cap, mid cap, or the small cap bias in this fund at any given point? Do you have any fixed ratios, or have you committed that itna to karna hi hai?
No, we will keep it very flexible. I will give you an answer in terms of a few examples, right? See, we've not kept any limits because it will depend on that time in the market. Where do we want to go? Which sector we want to be overweight? Which sectors we want to be underweight? Now, for an example, if I am meaningfully overweight on banks and technology, right, I will have relatively less companies and higher weight on large caps. If I am relatively more overweight on industrials, discretionary, and NBFCs, I will have more companies, less large caps, maybe more small caps. So we are not putting any artificial constraints on ourselves in terms of managing this fund. We are giving ourselves enough flexibility so as to ensure that we are able to optimally capitalize the sectoral opportunities.
We have seen, a lot of business cycle funds in the recent parts.
Ji.
And I guess some more AMCs are planning to launch this business cycle fund. Aisa kya ho gaya? Why everyone is asked after this theme? And if I were to ask you, and MFDs were to ask you, why Bandhan business cycle fund?
Yeah. Yeah. So I think people have realized that there is a risk appetite among the investors to invest in sector-specific funds. But the problem that happens in these sector-specific funds, sometimes the investor himself feels that it is time to move out, or sometimes the suggestions that he receives from many parts of the market may be prudent, may not be prudent. So there is interest for sector funds, but maybe not optimally managed. So there is a case for business cycle where the fund manager or the AMC will take the responsibility of shuffling around the sectors. And even in terms of asset allocation to some extent, right? You can have higher cash levels in the fund. We can become very defensive in the fund. And these are the attributes that are very valuable in certain parts of the market, certain times of the market. So I think that is where all the AMCs are looking for. There is a need in the market for this type of a fund, and we also feel that we should be able to do justice to and be true to the label. Now, when you look at Bandhan Business Cycle Fund, right, we are committing to sector deviations. We are saying at any point in time in 3 of the top 5 sectors, which form 60% weight of the NSE 500 index, we will have a meaningful deviation of at least 25% from the weight in the index. So, for an example, if industrial has a 12% weight and I am positive, I should at least have 15% or more. But if I look at my model portfolio currently and if I'm to deploy it, then I'll be meaningfully higher even from 15%. Or the case of materials, right? Materials has a weight of 9% in NSE 500, which will mainly comprise of metal, cement, and chemicals. And if I'm to deploy today, as per my model portfolio, my weight will be somewhere around 4%. Now, if being negative on materials, then why a 4% weight or actually 3.6% weight? Then there are some bottom-up ideas, right? There's a cement company which by itself is very well placed, maybe for some M&A activities. There could be some chemical company which is doing very well in a particular product that has got that is going to have very strong demand in India, right? Which is not very correlated to what will happen in the sector as a whole. So that is what makes the fund diversified, and we are still committing to sector deviations, so that will enhance returns. So risk management as well as return enhancement should be possible here.
When you say diversified, how many
Yeah.
stocks do you want to have in this fund?
See, we are not keeping a lower floor or a ceiling here, but we are saying that generally it should range between 45 to 60. Depending on where in the cycle I am, which are the sectors that I want to be overweight on, which are the sectors that I want to be underweight on. So maybe that is a range. It might deviate on the higher side at some point in time, but generally this should be the range.
I will request the participants, if you have any question, please put them on the Q&A or the chat box so I can pick up a couple of them. Vishal, I want to play a devil's role here, and I want to go back on that answer of yours that,
Please.
You will churn the portfolio and you will take active calls. You see, when you start a fund, it is easy to do that because that's the mandate and you start doing that. But sometimes investors and advisors feel that after the fund is, has gone through a couple of years, then the churn ratio reduces and the
Yeah.
fund manager gets tired of
Right.
churning and finding new sectors and the risk of churning.
Yeah.
As you said, lane changing is always very challenging because, you can miss out on the
Indeed.
upside. So, so, so do you think that, you will have the agility day in, day out, 365 days to churn the portfolio because every now and then the sector rotation will be there?
Right. Right. I'll tell you what I have been able to do in the infrastructure fund. If you look at Bandhan's infrastructure fund, it's a pure play fund. We are true to the label infra fund. We've not deviated to anywhere outside of infrastructure, right? And it's been many years that we've done it this way, and that is what has helped us to outperform as well. So that's a live example in front of you, rather than me committing to it and saying that no, don't worry, we will do it. That is actually the case that what we have done in the fund. So that is number one. Number two, we are saying, if you look at the fund casing, I'm not able to show the presentation here, but if you look at our fund casing, we are actually writing it down and saying that, yes, we will deviate. So, and that is what will drive the returns of the fund. But since we are present across the sectors, there will be some diversification as well, which should moderate the risk aspects.
Okay, Vishal. So in India, we have more than 1,000 equity schemes. And I notice when I do research, I find कि ऊपर में नाम, see, I'm just trying to,
Please, please, please.
okay, so
Be candid. Let's have a candid
yeah,
conversation.
so please don't get me wrong. I'm just trying
No,
to
not at all.
extract the answer that I'm looking for.
Yeah,
When I see the underlying portfolio,
yeah,
दिखता उसमें वही stock है जो हर जगह है.
yeah.
Because Indian equity market, although it is growing and is the third, fourth largest markets in the world, still it's a very narrowed down market of top 100, 200 stocks.
Hmm.
So I'm always worried about this portfolio overlap that
Hmm.
no matter what the strategy is,
Hmm.
eventually the money goes into the top 100 stocks only, majority of them.
Yeah,
What's your view on this, and how will is this a fair strategy? And if this is the fair strategy, then why business cycle? And if you're going to have a good overlap between other portfolio of Bandhan Mutual Fund, then why should one go into business cycle?
absolutely, absolutely. Very important questions. See, this was the case. If you look at the market, say from 7, 8 till advent of COVID, right? This was the case because quality was in play, right? Value was not doing well, growth was doing well, but growth associated with quality, right? And the corporate governance issues were also there in some certain cases. People were very skeptical. Post this, there has been a meaningful improvement. Right? People have realized, the promoters have realized, the governments have realized, and the investors have also realized as to we need to expand. Promoters have realized that we need to improve on management quality, corporate governance, and that is what we have seen. The governments have also realized that it is not prudent on our part to come and sell every time we see a stock run up even a little bit. Right? There has been some amount of maturity that has come about. This has led to the confidence of people to go down the curve, to go down the market cap curve, to go down the liquidity curve, and take up stocks, buy stocks even where you had some concerns, but where you feel that incrementally the change is for good. Right? This is sustainable. And hence, if you see, there has been a broad basing of markets and broad basing of funds. The overlaps, yes, very important, used to be very significant, but have started coming off. And as the breadth of the markets improve, as the depth improves, we will see less and less overlap. Now, if I look at my fund, right, the model portfolio that I have made for my business cycle fund, I don't see a very significant overlap, right? We have, if you see the returns of our funds, we have been bold enough, and actually we've banked on our research very well to take up stocks and to pick inflection points that in particular sectors, right? Be it utilities, be it real estate, right? We have been early in the trade. I think we've bought the right stocks, even at point in time where the overall MF participation in some of these stocks was low, or the institute participation was relatively low. Even then, we've got ahead based on our in-depth research. So, if we are able to do this and replicate our skill sets and utilize our skill sets even more in future, then there is no reason why we should be concentrated on the top stocks. We will look at buying some of the smaller ones that meet our criteria of management quality, earnings resilience, and to some extent valuations.
Wonderful. I will take a break here in terms of your business cycle fund, and I want to
Sure.
ask you as well as the opinion of the mutual fund distributors. Friends, I
Yeah.
want to have your opinion in the chat box. How many of you sell Bandhan Mutual Fund, and how many of you have never sold Bandhan Mutual Fund? And people who have never sold Bandhan Mutual Fund, why don't you sell Bandhan Mutual Fund is the question I want to ask. So yes and no can be the answer, and if the answer is no, if you can specify the reason why you don't sell. And Vishal, for you, my question is,
Yes.
I can see Bandhan is making rapid progress in the mutual fund industry. Some of your
Thank you.
calls have been brilliant.
Thank
Don't
you.
you see that there is still uh, 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 the potential to get bigger market share from mutual fund distributors, which you probably deserve but not getting? What can be the reason, and why, if you have to make a pitch to MFDs, that why they should look at Bandhan Mutual Fund, what it will be?
Sure, sure. Great, great. Thank you for asking this. So, we would definitely feel that we deserve some more attention from the MFD guys, right? From some of you guys, we deserve much more attention. And that, some more attention itself will be sufficient, right? Once you do that, you will realize that what we are doing we have changed for good, we have improved for good, right? What we are doing is in a scientific way, right? Which makes it very sustainable. The improvement in performance, and improvement in performance is not in one fund and for a small period of time, right? It is across funds and has been it's been quite a good time since we have been able to maintain this performance. So it is not sheer luck. It is actual hard effort, hard work, effort, and experience of the team that is going in. Right, we have expanded our research coverage meaningfully. We have expanded the number of people with enough experience meaningfully, and all of this is contributing to our performance. And hopefully, with some luck and with some fortune, hopefully we should be able to maintain this in future as well.
I wish you all the very best. And I can see that people are fan of your Sterling as well as core and equity. And many of them who are not selling because they don't have an office there, no relationship manager. So probably this is food for thought for the AMC as a whole, how to make inroads. But I think more or less people are, inclined. There's no negative observations about Bandhan Mutual Fund. That's a very good thing. So
Thank you.
with that, Vishal, I think, some of the questions which I got in the Q&A box have already been asked. So I will stop here. And any final observation, any final comments that you would like to make about Bandhan Mutual Fund or Bandhan Business Cycle Fund to the mutual fund distributors?
Sure, sure. Thank you. So one is we have doubled our reach in the last 2 3 years, right, across India. So we are now present across 96 cities and towns, from roughly half that few years ago. So we are cognizant of that, and we are expanding aggressively. You will get to hear that. If we are not in your city, we are very close to your city, at least that I can tell you. 96 is a decent number, and we are still expanding. So it's not that we are capped there, number one. As Bandhan Mutual Fund, we can assure you we are very scientific in our process. We are very diligent, right? And it's a great experience of the members over here who are very diligent and dedicated to improve the performance continuously. As Bandhan Business Cycle Fund, I think there is a clear-cut case for looking at business cycle as a category. There is sector rotation, and I'm sure you guys also agree. And you guys also suggest to your clients that move from one sector fund to the other sector fund. What a business cycle fund offers is a tax-efficient way, and let the responsibility lie with the fund manager, with a professional. I'm sure you go to several professionals during in your life, and you are also a professional to someone who is coming and consulting you, right? So me as a professional, let me shuffle among the sectors. I think I'll do a good job. Even if I'm wrong 1/3 of the time, 2/3 of the time, I'll be right, and that itself will be more than sufficient to enhance returns than the overall markets. So, and business, specifically as Bandhan Business Cycle Fund, we are committing to deviations, we are committing to sector rotations, we are committing to having more cash at some point in time. So, it's a top-down driven fund. Will be true to the label as a top-down driven fund. So, I think that is what I would like to end with.
Fantastic. Thank you so much for your brilliant insights and inputs, and all the very best to you, Vishal. I will, for a quick moment, take Nitin also with us. If you want to comment anything, Nitin, welcome. Nitin is the regional head for East.
Yeah. Am I audible, Brijesh?
Yes, Nitin.
Yeah. Thank you, first of all, for being patient. I think the initial glitch was something which was a bit disturbing. And thank you all participants for being patient with us. One or two points which I thought Brijesh came out of the questions which you asked. First one, I think I wasn't expecting Vishal to answer, since I am from the business side and he's from the fund management side. But he answered very well that as an AMC now we are present at 95 locations, about to touch 100 very soon. So that would enhance our reach. So the partners who messaged in the chat that they've never been contacted by the RMs, I think we will be contacting you soon. And we do have a VRM channel, which is the, if Brijesh, you can help me in this regard, if I can get the list of the partners who have never been contacted, I'll try and arrange for a VRM contact for them.
So friends, if you want to be contacted, please write your phone number in the chat box and we'll pass it on to the AMC. Yeah, please go ahead, Nitin.
Yeah, thanks, Brijesh. One very pertinent question which you asked is, will it be apt to classify a business cycle fund as a a flexi cap or a flexi market kind of a product rather than a thematic fund. I think couple of points in this regard. I think when we talk about a thematic fund, the investment universe usually is restricted. Say, for example, if we take banks and financial services, we all know that it's roughly 25% of the market cap. So our investment universe gets restricted to, let's say, a 25% of the market cap or 200, 250 companies at max, including large banks, NBFCs, and the smaller, even the holding companies. Whereas for a business cycle fund, that's not a restriction. Your investment gamut starts from the number one market cap, and it can, if the process allows, it can go down to the 1,000th company, which, as Vishal mentioned, is more than 2,000 crore market cap today. And since we don't have a large cap, mid cap, small cap bias, it can be, it can even be equally spread, or it can be, as of now, large cap tilt. But whenever the investment allocations allow, it can be reasonably to mid and small caps also. So I think this is one of the major reason which makes it a more diversified offering, and even complete flexibility maybe in a regard more than a flexi cap fund also. Second, Vishal, I think you will allude to this point that we have kept a higher provision to keep cash, since it's a aggressive satellite offering. In terms of cash, we can be 0 to 15% in the fund, which in our other diversified funds is usually restricted to 5 to 10% of the portfolio. But I think we've kept a higher provision for keeping cash allocations if required. So if you are there, Vishal, will you want to allude to that?
Yes, thank you, Nitin. See, this is a very important attribute of the fund, and a very important differentiation as well. There will be times in the market, right, where we think that it is now risen way too much and we want to become very defensive. So why to become defensive when we've realized that, yes, we want to become defensive? Why to do that only with stocks, right? We should have some leeway on the cash side as well. And we have utilized this aspect, and many other funds that you would have tracked over the years who have would have also utilized this provision. So sometime back, when industrials and infra became very volatile, we had raised a lot of cash, and we were when the stocks corrected, we had deployed this cash, which helped us in enhancing the returns of the Bandhan Infra Fund. So this is something that we keep doing among our funds. In this fund specifically, we've kept more provision because this is a fund that should capitalize on the cycles, right? And hence we have more cash allocation provision.
Nice. And when is the fund opening?
Yeah, I was about to touch that. So the NFO starts from 10th of September and it closes on 24th of September.
Wonderful. It was wonderful to have you guys, Nitin and Vishal. Thank you so much, and all the very best to Bandhan Mutual Fund. You guys are doing fantastic, increasing the wealth of investors and helping mutual fund distributors reach out to them. So thank you so much, and I wish you all the very best for your NFO.
Thank you for the opportunity, Brigade. Thank you very much for this platform.
Thank you, Nitin. Thank you, Vishal.
Thank you.
Thank you, Nitin. Thank you. And Brijesh, sorry for the inconvenience in joining.
No problem at all, Vishal.
Sorry. Okay.
Bye.
Thank you.